All right, let's get right into it. Somebody just made a massive, and I mean massive bet on the stock market. We're talking about a single trade worth nearly $2.5 million, all riding on one company, API Group. So today we're going to figure out exactly why.
And that really is the million-dollar question, isn't it? Or, in this case, the $2.4 million question. This isn't some flashy tech company we're talking about. API Group does safety services, things like fire sprinklers and security systems. So what in the world does this trader see that has him so convinced this stock is ready to take off? That's the mystery we're going to solve.
Just take a second to look at that number. Seriously, this is not a casual bet. This is not a lottery ticket. A trade of this size just screams conviction. It tells you that whoever is behind this has done some incredibly deep research and believes they see a massive transformation coming for this company.
Okay, so let's break down the actual mechanics of this bet. This investor bought options that don't expire until the middle of 2026, betting the stock will be way higher by then. But here's the kicker. For this bet to even begin to make a profit, the stock has to climb all the way past $49.35. That's a jump of more than 11% just to get back to zero. This tells you they aren't looking for a small pop. They're betting on a complete home run.
So how could a stock like this possibly make that kind of move? Well, the first part of the answer lies in a huge shift in API Group's whole business model. They're changing from just being a regular contractor into something Wall Street loves, a compounder.
And the secret sauce to this whole thing is something they call ISM revenue. That stands for Inspection, Service, and Monitoring. And think about it, it's brilliant. Once a fire safety system is put into a building, the law and the insurance companies require that it gets inspected over and over again. This creates this beautiful, high-profit revenue stream that just keeps flowing in, year after year, no matter what the economy is doing.
This is their genius flywheel model. Step 1, API gets a contract to install a system. That's the one-time gig. But then comes Step 2, what they call statutory capture. That's a fancy way of saying the building owner is now legally trapped. And that leads right into Step 3, decades and decades of that juicy, high-margin, recurring service revenue. The initial installation isn't even the main event. It's just the hook to land a customer for life.
And this isn't just some small part of their business. This is the entire game plan. The company's goal is to get a full 60% of all their money from this incredibly stable ISM business. When they hit that target, it completely changes the way investors have to think about and value this company.
And here is the proof in the pudding. This isn't just a theory they have on a PowerPoint slide. For 20 straight quarters, that is 5 years in a row, their inspection business has been growing by double digits. That kind of steady, predictable growth is like music to a long-term investor's ears.
Okay, so a stable, predictable business is great, but it doesn't really explain a multi-million-dollar bet on absolutely explosive growth. For that, you need a powerful catalyst, and wouldn't you know it, that catalyst just happens to be the single biggest tech trend on the entire planet right now, the AI data center boom.
This quote right here tells you everything you need to know. We're not talking about a sprinkler going off in some random office. In a data center, which is packed with billions of dollars worth of computer chips, a fire or a cooling system failure isn't just a problem, it is absolutely catastrophic. That makes what API does completely mission critical.
And the amount of money being thrown at this is just mind-boggling. You've got projects like the Stargate project pledging $500 billion for AI infrastructure. Every single one of those new buildings is going to need the most advanced fire suppression and cooling systems you can imagine, and that is API's exact specialty.
And look, this isn't some science fiction concept. These are real projects, with real money, happening as we speak. Stargate, Frontier, Digital Leo, these are monster, multi-billion-dollar construction projects. And every single one creates a tidal wave of demand for API services, not just to build them, but to service them for decades to come.
So, let's recap. We have a super stable foundation, and we have a massive growth catalyst. The third piece of this puzzle is how API adds rocket fuel to the fire by buying up other companies through smart acquisitions, or M&A.
Let's look at a perfect example, a company called Certasite that they bought recently. It's a textbook case of their strategy. It fits perfectly into that inspection-first flywheel we just talked about. It adds about $90 million in high-quality revenue, and it immediately starts making the whole company more profitable. This is their playbook, executed perfectly.
And they don't just do small deals. Our whale trader is almost certainly betting on the massive success of their huge Chubb acquisition from 2022. Right now, they're in what they call the value capture phase. Basically, they're taking Chubb's giant international business and transforming it into that super profitable 60% recurring revenue machine.
And look at the timing of the bet, July 2026. That's no accident. That's right when the results of this big integration should be crystal clear to the entire market. And this isn't a one-and-done kind of thing. The company has a war chest of about $250 million that they plan to spend every single year buying up these smaller, bolt-on companies. For them, M&A isn't just something they do sometimes, it's a core, ongoing part of how they plan to grow.
Okay, let's put all the pieces together. We've got the stable base, the AI growth engine, and the M&A accelerator. How does all of that actually translate into the stock price going up and making our trader a boatload of money?
Well, here's the key. The company's already delivering. They keep beating what analysts expect them to do, and then they raise their guidance for the future. When a company keeps telling Wall Street, hey, you know those great numbers we promised you? Well, we're going to do even better. It builds a ton of confidence that they can actually pull off their long-term vision.
Now, if you're a skeptic, you might look at one number, the price-to-earnings ratio, and think this stock is wildly expensive. But that's a classic mistake here, because accounting rules from all their acquisitions make that number look weird. The bull case, which our whale trader is clearly on board with, says you have to ignore that and look at the actual cash the business is generating. And when you do that, the company actually looks cheap for how fast it's growing.
And this chart really puts it all into perspective. On the left, you've got the stock price when the trade was made. In the middle, that's the break-even point, just under $50. And then all the way on the right, that's where some of the most bullish Wall Street analysts see the stock going, $54. So you can see the price needed to make this trade work is right in the range of what the pros think is possible.
So if we boil this whole thing down, the entire $2.4 million bet rests on these three simple ideas. Number one, safety laws create a rock-solid base of recurring revenue. Number two, the AI boom provides a huge wave of growth on top of it. And number three, smart acquisitions keep making the entire company more and more profitable.
And that brings us back to our big final question. Is this massive trade a sign that we're watching the birth of a new kind of industrial giant, one that's essential for our tech-heavy future? Or is it just a super risky gamble that needs absolutely everything to go right? Well, that's what the market and our whale trader is going to find out between now and July of 2026.